Good morning, everybody. It's Tuesday, April 30th. And this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at May corn down 3/4 at 438.5. May soybeans were down 4 at 1156 3/4. And May Chicago wheat was down 9 1/4 at 581. Yesterday afternoon, we had crop progress released. Corn is 27% planted nationally versus 22% for the 5-year average, and up from 12% last week. Soybeans came in at 18% planted. That's against the 10% average and 8% from the previous week. Winter wheat ratings dropped 1 point to 49% good to excellent. That's also higher than the average of 44% and the highest rating since 2020. Today is first notice day, so I know we've got that going on. I think we had kind of a nice visit here earlier this morning just on commodities in general, and just we took a look at a couple of different markets, talking about money flow and things like that. So Justin, maybe a few thoughts to kick us off this morning, and then we can move it around the room.
Yeah, thanks, Dan. Just some big moves last few days. If you look at some of these winners, and the Bloomberg index was really turned up. Our markets were pretty stubborn, and it was things like gold, crude oil, copper, cocoa, a lot of the softs, cotton. And if you look now, some of these have major tumbles. So cocoa's down almost 30% in a week or so. Cotton got absolutely destroyed again last night. So it's off almost, I think, almost 30-40% as well. Soybean oil last night, nearby soybean oil made contract lows. It's the lowest now in almost 3 years. So the market, there's a lot of money moving around. There's a lot of volatility, and you don't know if you see some of these kind of rotations from certain sectors of commodities into other ones. It'd be nice to see something in grains. But either way, there's tons of volatility. So just kind of a reminder of how fast things can move. When money gets behind a trend, or X crosses Y on whatever indicators that these traders or these computers look at. The moves are super violent, super fast. So if there is a reason to pump money into a certain commodity, the willingness is still there. Soybean meal, for instance, even opened up $4 lower Sunday night, and then ripped higher yesterday, and then again. So immediately went from turning down on the chart to making highest for the move. So I guess it's more of an observation than a giant statement. Just that a lot of these commodities, there's a lot of money moving around, and I think there's different things happening with all these different policies, an election year, tensions, all these things we've been kind of talking about for weeks and weeks now. But you can kind of see how quickly it can affect producers or people that actually use the commodities. For instance, if you were going to plant a lot of cotton and you decided to do that, the price is vastly different from where it was in March in a matter of a month and a half. So not to say what direction that means for our products that most of our listeners focus on. Hopefully you see money flowing out of some of those things and into our markets as we head into the growing season, but we'll see.
Yeah, that's a good point. And as we get caught up in our industry, a lot of headline chasing and things of that nature. There were news stories out yesterday about the Argentine union strike and things of that nature, and people trying to associate. I mean, Justin, thoughts on that infiltrating a little bit into the price action that we've seen the last two sessions?
Yeah, it's the annual Argentine strike, right? I mean, it's not if, it's when. Pardon me. And so I think that kind of helped meal rally. We also had more stories about more used cooking oil being imported. We've talked about this several times. Other feedstocks coming in to be used in place of soybean oil for the renewable diesel feedstock. So, some loopholes there and unintended consequences and, things that probably need to change. Ultimately, I think it's, you're still using that globally. That feedstock is not being used somewhere else, and now is being used for biodiesel, and we'll, eventually use more global oils for this, big demand base that we've built. In the short run, it's, it's like importing beans from South America going into our harvest. You get a couple of cargoes in and it panics the market and those kinds of things. So yeah, this whole Argentine thing's really interesting, right? The new president there is really trying to shake things up. Not surprising that there's some strikes going on and things of that nature. Yeah, there's a lot of tension in the world and a lot of headline risk day to day. That hasn't really changed. It's probably going to ramp up, especially since this is an election year, and we all know how tense both sides are on the upcoming election. So I would expect volatility to stay, very strong throughout the year, personally.
Yeah. And you mentioned just, continued election year and certainly the inflation piece isn't going away. This morning's employment cost index was up 1.2%. They were looking for 1%, but I think it's just headlines, the fact that they continue to get negative inflation data, report after report. And I guess we can all make our assumptions about what that means and what that's going to do for policy, but it just doesn't seem like anything's getting much better on that front.
Well, you just can't spend trillions and trillions and trillions of dollars and not have consequences, right? So We're seeing that we're in a new era. No one's really sure. I think the market was trying to convince itself that we'll just have these rate cuts and kind of go back to the way things are. And I think the realization is that's probably not happening anytime soon. I'm sure, the Biden administration would love to see cuts going into elections, but the data is really not backing it up. And it's just kind of causing the markets to be jittery. I do think ultimately when you see stubborn inflation like that, it does have an underlying support for commodities in general. And you look at, we've taken a lot of price premium out of, the grains. You look at, monthly kind of where we've been, we've taken, 40, 50% out of prices from, kind of the peak levels. So to me, it feels like, when you see $4 corn, right, that's kind of back towards the high middle range of what we've had for years and years and years. So how much more premium do we need to take out if we do, or are we starting to find some kind of a base here where there's just a value in several of these commodities? Not that it obviously can't go lower or things like that when you have surpluses, as we've seen in soybean oil, we've seen in some of these other things where they can certainly, drop dramatically. But yeah, I think there's enough risk going into the growing season that I'm not sure there's a whole bunch of appetite for really, really pressing it here, but we'll see.
Right. Ben, you're muted. Go ahead there, bud. Just unmute yourself.
Thanks, Dan. I would just an observation, kind of tailing off on what Justin said, is this is the first notice day we've had since September where we didn't make new contract lows. So, maybe that's a little bit of sign that the blanket that's been on the grain market is maybe not as wet as it was. And we've talked about that, parsing out some of that continued overhead resistance from an undersold farmer. And should we give the market a reason to see a wider spread cover or some risk into here? I think it could potentially come pretty quick. So encouraging that we did not make new lows on corn and beans here in this period. So.
Yeah, absolutely.
Well, I just want to add to that real quick. One thing that's nice, I mean, we've talked about this also, but we've seen demand on the breaks. Corn specifically, we keep talking about this, but we have these 10, 15 cent breaks and it runs into demand. And those are the starting, that's how you start to, find out the price on bear markets. You have to go to a price where you pick up demand, right? That's Econ 101. And I think we're seeing that, right? Where we have seen it for months now. So that's the first sign, right? That doesn't necessarily fix everything, but at least we found a level of demand in the corn market. So that's, I think that's encouraging.
Yeah, and I mean, everybody wanted to beat up on inspections yesterday, but it was still 1.2 million, so it wasn't like we completely fell out of bed. Beans, on the other hand, I mean, 250,000 was pretty putrid. They're going to have to revise something there, you would think, as we go forward. But, yeah, like you said, Justin, week over week, we continue to see at least some glimmer of hope there in the business side of corn.
Yep.
Dustin, anything on the registration side? I know we talked briefly about it this morning. Did you see anything there that changed overnight given first notice day?
No, I just think, there were a number of soybean oil deliveries. There was 1,151 Chicago wheat deliveries, 533 May bean deliveries, but 0 corn. So that really reflects that tightness we saw. We bounced off that spread low May to July. A while ago, we're down that 14.5 under. Now we're, into 10 under. So there's still a measure of tightness and not a willingness for delivery right now. The May contract's always a hard one to get a gauge on, just because, during the planting window, we've seen May, July, 40 over, 50 over in recent years, especially when we have a good export program going on. We're in talking about a much more abundant supply situation this year. Still, the last couple of roll periods that Ben mentioned, we had much wider spreads. Like the Dees and the March first notice day, much bigger percent of full carry than we're seeing for the May corn contract. So hopefully that's a sign that things have cleaned up a bit. And there's still a measure of tightness from July to SEP and July to Dees as well. So, despite very large carryout projected at the moment. So a little bit encouraging for sure. One thing I'll note that is interesting is, like, you go out to the back market spreads like wheat and corn, like, wheat spreads have gotten very wide. Talk like July Chicago wheat out to May of 25. And then same thing for corn. So corn has already gotten down to, near 30 cents. It's 29 and a quarter cents there the other day on Dees corn to July corn of 25. I think that's an interesting story, that we haven't really had it that low in a while. And it was actually going back to 2019 was the last time that we would have had spreads this low at this time of year. And of course, we all know what happened that year. It was huge record fund short of corn going into a season, and then it just continued to rain. They had to blow out of that position. That spread rallied up almost to even, over 30 cents from that 2019 low into that summer high. But what I think, one observation that we have is that last year, no one wanted to take a look at those spreads again and look at that carry rate that had changed from that starting that 2019 year. That's why I was able to go that wide in 2019 in the first place. We had just gotten so used to and accustomed to a tight corn carryout that everyone was surprised once July started getting down into that, 25 cent range, 26 cent range. Everyone said that's a pretty good carry. Well, we ended up having a 47 cent carry in that spread at the end of the season. But it took a very long time for the market to be convinced of that. Even during the middle of October, we were still trading at, rather melancholy, subdued spread rates going into what was turning out to be a pretty big crop. When we're already at 29 under at this stage of the year, and the year is not written at all, I think the market's gotten a little bit ahead of its skis on what they're projecting for, corn carryout. And I think that's reflective in the corn bean ratio as well. So I think it'll be interesting to see what happens as we go into the summer with that spread. If we start to see the funds pull out of their short positions, as we saw in the last COT report, I think that's something to watch with that spread as well, because typically they're going to be short where the liquidity is, the front end of the market. If they're pulling back on those shorts, that could get some interesting spread moves next couple of weeks.
Yeah, it's also interesting, if you look at that Dees forward through July of 25, like you said, but then you look at July 25 over December of 25, still 15 cent inverse. So very, which I think is a fair value, maybe later in the year, to your point. But the July Dees is saying that we're going to have a tight carryout, right? And Dees July is saying it's going to be super burdensome. So it's a really interesting, what we call in the industry, a butterfly. Usually if you're going to have a, something like that, you would have all things at a carry, right? So the market's saying that we're kind of tight, but we're just going to have way too much. And, it could end up being the case. But you said it's really, really early for that.
Yeah, it is. I mean, it's going to be something I'm sure we'll be talking about more. But just East July was at into the teens here after that March 28th report. We had a bullish corn report, and that spread was 10 cents higher than it is right now. So someone, I don't know if it's order flow or funds or what, but they've been really, really selling that. Even as corn has found some support, they've been selling that spread. So I think that might be maybe a mismatch on order flow.
Something we'll definitely keep an eye on there, guys. Thanks for those comments. Ryland, coming into the open here, a couple thoughts on cattle as we start the day.
Yeah, we're getting beat up a little bit this morning. We're kind of lower in the cattle, a little bit firmer in the hogs. There's some word yesterday that there was a Texas plant that was dark. I don't really know the reason for it, but that was kind of going around yesterday. So we did see prices kind of start firm and then slip kind of out of nowhere. So slaughter was only 113,000 heads. So it kind of looks like that was reflectant in that. But yeah, I mean, we're kind of coming in this time frame. Just there can be a little bit of money flow kind of moving around just with April going off the board today. All the focus kind of on the spreads right now. So it seems like at least the action yesterday just looked like there was a lot of bear spread activity, a lot of short June, kind of long August, short June, long Oct. So I think that's something to pay attention to, that those spreads are starting to kind of fall back to support levels. So, there hasn't really been much cash trade to speak of. Beef was higher, but I think expectations this week were just kind of steady firm, just around the horn early. So we'll see what we get. We don't expect any real cash trade until closer to the end of the week. But right now it just kind of looks like money flow to me right now with what's going on the hog side of things. Kind of stopped the bleeding after the recent losses. Cash was a little bit lower, but cutouts started to firm back up. You had pretty much all the more some of the larger percentage cuts, the bigger cuts, all above their 5-day moving average. But once again, it seems like kind of momentum's been turning down over the past couple of days. So that's something to keep an eye on. But I think overall, everybody's got some pretty friendly seasonal expectations for cutout in general. So we'll just kind of see how that goes today, and waiting for some cash to develop on the cattle side.
Very good. Appreciate that. Just came into the open here. We're going to move over to July, given that we're in delivery. So July corn is down a quarter right now, 448 3/4. July soybeans are down 3 1/4, 1178 3/4. And July Chicago wheat's down 6 3/4 at 601 3/4. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate all the comments here this morning, guys. It was a good conversation. I hope everybody has a good day, and we look forward to talking to you tomorrow morning.